So I started a new project yesterday in which I'm gonna pay off my mortgage in 8 years. Next 8 years, I'm gonna pay completely off my mortgage on my house. Instead of 26 years plus years, if I played it normal. With this method, I'm not gonna put any dollars extra to that project.
Hipoteca. Hipoteca. Mortgage.
Without any extra dollar, I can pay off my mortgage in 8 years. And I'm going to explain what I'm gonna do, and also I'm gonna show you the progress of how I'm doing and how I might need to make an adjustment and so on.
Préstamo. 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 Loan. Lending.
And because I believe everyone who owns home and then owe mortgage will take this method, because without extra dollar you can pay off the mortgage completely in 8 years instead of 30 years.
So this is the simplest explanation of what's gonna happen to my mortgage, my plan for next 8 years. I will explain you the details of it and how this thing's gonna work as a whole, but just to show you the plan and what's gonna happen, this is it. This is one of the mortgages that I have right now, and it has 26 years and 9 months, almost 27 years of remaining time, with interest rate of 3.75%. With this rate, I am going to pay $142,000 of total interest over the life of the mortgage. That is scheduled to end November 2046. What if I have $12,000 and put that $12,000 into principal today? I will save $19,000 in interest instantly. New maturity date becomes April 2044 and save more than 2 years. Here's the real trick. What if I pay $12,000 annually toward the principal? Total saved interest will explode to $79,000. New maturity date will be February 2030.
Now make sure to subscribe this channel and check out the playlist that I made for this particular project so that you won't miss any information that you need to know to be confident, so that you can take the same action to save tons of money and tons of time to terminate your mortgages and you own the full house.
So the question is, where do I have $12,000? The answer is HELOC, Home Equity Line of Credit. A home equity line of credit, or HELOC, is a loan in which the lender agrees to lend a maximum amount within an agreed period, where the collateral is the borrower's equity in his or her house. If your home value is $300,000, for example, and your principal balance is $200,000, then you have equity of $100,000. Typical lender will lend up to 80% of your home value. So basically, 80% of 300,000 is 240,000, and minus 200,000 will be 40,000. So you can have a credit line of $40,000. But for what I am intended to do, you need only $5,000 of the credit line, even though that doesn't sound a lot. But I'm going to show you how you can do it with $5,000 credit line in detail. Calificación. Calificación. Grade.
Qualification.
Of course, always more the better in terms of financial figure, but for what I'm about to do, you will need only $5,000 line of credit to be able to borrow $5,000 at a time. Then we pay that $5,000 toward the principal of the mortgage. At that moment, the amortization schedule is recalculated and you save a lot of time and interest, total interest to pay. We will pay off $5,000 loan, that debt, within 4 to 6 months, and so you can rinse and repeat the process. Now you can pay $15,000 toward the principal of the mortgage annually. I'm gonna explain the detailed process of how you would do this later. But let me explain why HELOC is so good for doing this. Tasa, tasa, tasa. Rate. HELOC works like a credit card. Minimum monthly payment consists of interest only, but it's way cheaper than credit card interest rate. I have 4.6% interest as of today. So why this 4.6% is better than my 3.75% of mortgage? And you will see. So this is a typical loan interest calculator available online. So let's say you borrow $5,000 at 4.5% interest rate for 5 years. 5 years. You will owe interest, total interest of $592, which we actually paid off in 4 to 6 months with your current paychecks. You will be surprised this one-time $5,000 principal payment will reduce in terms of interest, total interest you would pay for the mortgage. For 4 months, it's going to be only less than $100, around $50 maximum. As I mentioned before, I already started the process, so I made the first payment, and that was exactly $5,000 toward the principal. So I made a payment toward the principal for $5,000 earlier. Amortization schedule was recalculated instantly and saved me $8,348 of total interest and shortened the life of the mortgage payment about 13 months, a year. And my interest payment to the $5,000 HELOC loan is going to be $50 for over the 4 months maximum, because I think it's going to be actually lower, and you're gonna see why. I am going to get into more detail, and I'm going to share with you my progress and process and what happened, so that you can be confident to do the same process for your benefit. So make sure to subscribe to this channel, and make sure to check out the playlist that I created for this specific project. Terminar. To finish.
So everybody knows that, if you pay extra money toward your principal, then it will reduce the time of the life length of the mortgage, and then therefore you save interest. But you always have to think about what is your return, whether it's quantitative or qualitative, whether it's countable or uncountable. Because is it worse to put your extra money, if you have, toward the principal of your mortgage? That's a question that that thought about return on investment can answer you, right? So, and I figured, actually, I like investment, so as I can find a better return, the investment gives me better return without extra money. So I wouldn't necessarily be eager to put that extra money toward the principal of the mortgage, right? Because that's the thing that you need to aim to be more efficient and more effective for what you get. So but if you can utilize the equity of your house that you already have and use other people's money to get that kind of return, that is priceless, right? Because basically you are putting $0 in. So what is the return? I mean, the rate of return is incalculable because you are putting $0. So whatever you get is infinitive percentage, right? So that's the beauty of this method. And you always have to think about the whether qualitative or quantitative return on investment that you are making, and you have to always weigh and balance. And then balance is the key to the life, right? So that's the thing, the beauty of this method, that you are not putting any dollars from your own pocket. Ayer empecé este proyecto. En este proyecto voy a ahorrar muchos dineros. Voy a terminar hipoteca en 8 años en vez de 26 años. Ahorrando muchos dineros, y no voy a poner $1 para hacer eso. Es totalmente gratis. Y terminar mi hipoteca en 8 años en vez de 30 años. En mi caso, 26 años. El método es muy bien y muy bueno, y todo el mundo puede hacer mismas cosas, puede ahorrar muchos dinero.
Amortización. Amortization.
Voy a mostrarte cómo haga eso. El método es muy sencillo. Por eso, todo el mundo puede hacer eso.
Liquidación. Payoff.